Forbes India presents India's growth drivers, powered by Barclays Private Clients.
Hello and welcome to Forbes India presents India's growth drivers, powered by Barclays Private Clients. I'm your host, Gautam Srinivasan, and our focus for today is India's unicorn story, which has captured the imagination of innovators and investors alike. Indeed, looking at the numbers, one unicorn minted almost every 5 days in the first 2 months of 2022. And you can understand why it's going to be an important part of India reaching that $5 trillion economic target. But what's the situation on the ground, especially from the perspective of managing an enterprise, managing wealth, and managing innovation? Well, I've got some of the finest minds to discuss that around me on this table. So let me quickly introduce them to you, starting with Kallol Banerjee, who's the co-founder of Rebel Foods. We also have with us Aakrit Vaish, who's the co-founder of Haptik, and also with us is Nitin Jain, co-founder of Ofbusiness, and finally Jean Damien Marie, who is the managing director and global co-head of investors at Barclays Private Bank. So we've got the business leaders and the wealth leaders with us on this table, and it's going to be a wide-ranging conversation, and I'm looking forward to all of your insights. India's unicorn universe is expanding rapidly this year, even more than last year. If you look at the numbers, we've reached 94 so far, and by the end of the year, easily 100, the target could be hit. Some estimates are even more optimistic, and they're projecting 250 unicorns by 2025. So the question on everyone's minds is this expansion sustainable? Is India's unicorn story sustainable, or is it just a passing phase?
I think there are people lose track that there have been 3 big events in the last 5 years that have led to the digital kind of ecosystem exploding, right? There was, the launch of Jio and how that influenced data in terms of consumption and prices. And now I think India is the highest consuming data country in the world. There was demonetization, which led to the wave in people adopting digital transactions. And then finally, not a good thing, but at least what further propelled kind of tech innovation was during COVID, right? Everybody, or let's say masses that weren't used to transacting or consuming digitally, instantly moved online. So if you think about these 3 things, and sitting here today in April 2022, just coming out of all these 3 events, I think the digital ecosystem accelerated by at least 5 or 7 years. And this next decade is going to be absolutely phenomenal. So the answer to all your questions was yes, right? That yes, I think there's enough over here that merits the valuations. And I think we are still yet to see some of the best companies being built.
All right, the stars aligned, and here we have a very vibrant ecosystem forming, which will hopefully be resilient. But speaking of resilient businesses, it's always transparency and disclosure, which are going to be important factors when it comes to all this global investor interest that we are seeing. So, Kallol, from your perspective, transparency and disclosure, the broader unicorn ecosystem, your thoughts on how businesses are being run, and what are the key performance indicators that you would base your assessment on when it comes to transparency and disclosure?
I think in the recent past, there have been some exceptions, which are really bad for the ecosystem as a whole, I think. And I would think that the vast majority is definitely, standing aside from this crowd, and as maturity comes into the system, this is going to be a sort of a necessity, and not an exception, I would think.
All right. And your experience in a very, very hyper competitive business, does it still bear to that same standard where disclosure is kind of like part and parcel of the game right now?
So I think it's specific to our case. We are actually seeing the dismantling of an industry. So that's what our belief is, that the food industry, for example, has been stagnant over the last 500 years or so. There's been a way of doing business which is finally getting internetized. It's basically disassociating 3 things, which essentially a restaurant or a food business is, which is a brand, a manufacturing and a distribution. And they're all housed at the same place. Now with deliveries happening first, which we think is the first wave of the disruption, that the distribution is now gone to specialists. Following that, the brand building has to follow. It has to move digitally. And if those things become digital, then it's happened in every other consumer industry. Whether if you take Nike, for example, the brand is in the US, the shoe is getting manufactured in Vietnam, and it is being sold by Walmart. So I think that's what's going on in food.
An offshoot of investor interest is valuation. Jean Damien, if you look at valuations, some of the figures are at $500 billion cumulative valuation in 2022. They sound remarkable. In your opinion, will unicorns be able to justify these valuations? And also when we look at it from the perspective of global benchmarks, right? Are they kind of forcing the investor money to go more towards growth now and profits later?
The way you think about it, you look at comparables, right? And you look at various rounds in globalized industry. I think to me, the short answer is yes, in the sense that we've just heard it. It's about facing a great market with great growth dynamics and best practice as far as dealing with investors on the disclosure side, as an example. We're not surprised to see, I think, the momentum in valuation we're observing with India, because the fundamental dynamics just deserve it. It's not explained by a pure money flow angle, if you want, but there's value creation happening with our three unicorn founders at the table. Question two is, is it more about making money or showing growth rate? I think, in venture capital investing, usually looking for cheap things is not a great recipe because they may be cheap for a reason. So the addressable market is always, I guess, a big consideration when you think about those valuations. But I think at the end, growth, remains the number one driver, because quality growth that can be explained by growing addressable market, growing margins, is probably more important. The first mover advantage, being there, capturing the market in history, in venture capital, explains.
So quality growth beats anything, at least at the moment. But quality and organic growth, while they're great terms, the issue comes in terms of expectations, right, Nitin? When you have a surge of money coming in, you also have a burden of expectations. And I think there's a song which goes, more money, more problems. So if we look at it from that perspective, is the narrative somewhat changing, where somewhere founders are also kind of taking a step back, looking at what this expectation is in terms of the money coming in, and addressing that fear as to whether that expectation could lead you into, say, non-core areas? Because you might be growing well 30%, 40%, but if the surge of money comes in and you're expected to return higher rates of growth, which won't be possible in your core areas, and then you're forced to enter into non-core areas, what do you think could be the repercussions? Because there's always the initial rush of IPO and then later that public market pressure coming in. Your thoughts?
Yeah, so absolutely. So I think the Indian startup ecosystem is evolving. And evolving not every year. I think it's evolving every month. So we're looking at the trends, right? So when the public markets are taking a beating, we're looking at the private markets, what the private markets are doing, and then adapting yourselves to the situation. So you're absolutely right in saying that, with more money comes greater responsibility, because ultimately you have to deliver that kind of growth. So I think it's very important to look at startups who had this fundamental base, and they've got the fundamentals right? So essentially those startups who just focused on growth without looking at profitability are going to struggle when they raise money in the future, because then again, they'll be running after growth as well, right? So, and again, profitability at scale is just a myth. But I think on day one, it's very important for startups to realize that if you get your fundamentals right, if you are very clear that a company is there to make money, right? So you have to focus on your bottom line. Your top line has to grow, no doubt about that, right? So you cannot compromise on your top line. But if the top line is there at the cost of your bottom line, I think that's fundamentally wrong. So what we built is basis those principles, and we hold those principles to heart, that the growth cannot come at the cost of profitability. Right? That has to be the thought process of every decision making that we do, right? So that's why the investors have backed us as well. And, investors will continue to back people, those who continue to think about both growth, the markets, and profitability at the same time. So any miss is, I believe, the world is changing again very dynamically. It's changed during COVID as well. COVID has taught us that those startups who were only focused on growth suddenly realized that there was a huge burn because there was no growth anymore. So those startups who were sort of profitable and those who had that reserve to sustain themselves during COVID, they were the ones who actually rushed ahead. So COVID has been a great leveler of sorts in terms of VCs going after those companies who got their fundamentals right.
Get your fundamentals right. That's the message. Aakrit, you want to add anything to this? I mean, when you look at Haptik, it's sort of like a heritage product. So many of your colleagues have gone on to found their own business. So what's your message to the potential founders of tomorrow?
Fundamentally, right, just like any other business, even a tech startup, every single sale that they make should inherently be a profitable sale from day one, right? Like, that should not be compromised. And that is what we call typically unit economics, right? So what it costs you to build that product for whatever you're building, you should have like a good margin on top and sell it. That should happen literally from day zero, right? That should not be the case where you should think about it any different later on. In the old world analogy, I'll give you an example, right? Let's say if you were building a business where you're going to be selling a shampoo, just putting it out there, right? In the old world FMCG days or chemical days or whatever, what would you do? You would raise a bunch of capital to set up a factory, right? And you would invest into the factory, labor, all of that, build the product. But the day you go start selling the product on day one, you're not going to sell it at a loss, right? You're going to sell it at the gross margin that will be profitable. So in the startup world, think about the reason to raise that capital is that factory, to build the product, to build the large teams and so on. And the best companies, they continue raising more capital, not to finance the growth of the existing business, but to finance new products and new businesses in which they want to get in. The only case this does not apply is when you're building a business that requires a fundamental change of behavior. If you're trying to do something which is going to force people to completely alternate the way that they're doing things, absolutely. To invest in the change of behavior, you will have to invest in that, right? But I also have a very polarizing view. I don't think there have been more than genuinely 5 companies in India over the last 15 years that have genuinely built businesses that required fundamental change of behavior. And Flipkart was one of them, absolutely, right? And Flipkart, Amazon were one of them. But beyond that, I think most other businesses in India are using technology to build a better way of doing the same business. India has more tech-enabled companies than pure tech driving or changing companies. It's not a bad thing. I think it's a good thing, right? Because fundamentally, the dynamics have existed for a long time, but it was difficult to build those businesses because you did not have great tech to build it. So I think in India, the tech-enabled businesses are a lot more, and almost all the unicorns fall in that category, which is a great thing. But there, it would be foolish to invest in changing the behavior because the behavior exists. You're just modifying it differently.
All right. So taking cue from that, Kallol, I mean, you operate in a market where, when we look at food tech and all the developments, a lot of the headlines get captured. But when we look at, say, the key growth drivers, you have disruptive innovation and emerging business opportunities, fine. But what else? What makes India a red-hot unicorn destination, in your opinion?
See, I think fundamentally what we are seeing here, is essentially leapfrogging of what has been infrastructural constraints. So, if you look at education, for example, we never had enough schools. And it takes years and decades to build the infrastructure, put the buildings, get the teachers. So we just leapfrog it with Byju's. Similarly, if you look at UPI payments, same story, you never had enough banks to start with. So I think this is this typical leapfrogging that we have been adept at in wireless telephony, for another example, which is happening. And it depends on how you are solving that problem. If you're throwing money at it, if you're throwing people at it, that's not going to do anything. It's just kicking the can down the road. So, fundamentally over time, you will see technology gets cheaper. And so if whatever you're doing, if the solution does not involve something which is tech-enabled and solving it at the root, then that's not building value.
That's an interesting point, because India has been, it's used to being a leapfrog economy. Whether we look at the telecom revolution or whether we look at the payments revolution, it's all come in one burst. So somewhere it's kind of built up a different kind of user behavior and built up that muscle to take a business forward. Jean Damien, from a global perspective, your thoughts on what makes India a red hot unicorn destination?
Yeah, seen from an international allocator perspective, I think that I'm back to the quality discussion we've had just before. I think the fundamentals in this country are just excellent. If I just took notes, but I was looking last night. India has like 1.5 million engineering graduates a year compared to 300,000 in the US, right? You have like twice the number of internet users the US has. So as a basis, fantastic fundamentals. Then you have quality ecosystems which are in different valleys, right? In India, not only one location. You have government involvement, government involvement to support this leapfrogging exercise. So I think the combination of very strong fundamentals, so you can build quality companies in a very dynamic and massive addressable market, is fantastic. And frankly, when you look at the opportunity set from an international perspective, you're not going to find so many of them having those combined characteristics. But I think, again, to me, the key differentiator, it's not, as we discussed, it's not about having the biggest number of users. It's not about having, the fastest growth, but it's having this combination of quality you can understand, which is behind those companies, and the relevant ecosystem, which at the size is quite unique.
All right, Nitin, let me get you to comment on that. Indian startups are becoming kind of like all-rounders, where the quality itself has improved substantially. So your view on this comparison between, say, Indian startups and their global peers, what do you think separates Indian unicorns from their global peers? Because commentators, and in this discussion itself, we have seen how the quality has improved, better business model, more innovation. Your thoughts?
So I think pre-2015, right? So India just did not realize its potential. So India never knew that, yes, it could catch up to the US. It never knew its true potential. Although we've got 1.5 billion people, that's about 5 times the population of the US, and almost as large as China. So people didn't realize. And as JD mentioned, there are 1.5 million engineering graduates as opposed to 300,000 engineering graduates in the US. So the quality coming from India and reverse brain drain that is happening, especially in this decade, where I think my co-panelist also came back in the last decade. So did I. So I was also in London for about 7 years. But then suddenly the realization happened that, listen, India is a huge TAM, total addressable market in India for anything, be it tech, be it actual products, be it anything. You can just take an existing business, make it tech-enabled, and you'll be able to squeeze a lot out of that particular ecosystem. So that realization that has happened in the past decade. In fact, I would say in the past 7 years, 6 to 7 years, this realization was not there before. So I think India, because of this realization and reverse brain drain that is happening, is catching up to US extremely quickly, and it's catching up to China as well. And India, because of COVID, I think is at the forefront of globalization with India's global policies, with the free trade agreements happening with the UAE as well as Australia. I think these are excellent signs for India to just leapfrog into the next, into the stratosphere. So I think that is what is happening. We've just started to realize our potential. Earlier, we were sort of just, we were with our eyes closed.
Well, if you can win here, you can win anywhere, I guess you could say that. But also as an offshoot of this, Jean Damien, do you think, considering where we are and this redefining moment of how things could change and the interest which a lot of the global funds have shown in the India growth story, do you think that interest is a challenge or is it an opportunity for a lot of these startups? Because heightened investor interest could also result in more expectations, which could change the very nature of the company. So your thoughts on this?
The great thing about India VC investing is actually that those funds have been around a while. So when I think about, again, the question earlier on valuation, it's not like you had a market which was pushed by domestic constrained investors who had nowhere else to go, if you want, and pushed valuation on a non-reasonable basis, because it was a combination of domestic capital and international capital actually very early on with the big guys establishing teams in the country, which I think created a positive dynamic actually. Now, I think, diversifying your fundraising, I see it as positive. I'm not in your shoes, but I think when you actually build, again, I'm using quality a lot, but a quality investor pack where people actually can see the long term, they have different needs, they have different cycles possibly. You are basically de-risking this down round event that is always a bit of an obsession a lot. So I think, global capital is a great thing, but I think it's already there, and it's been a positive story, and will remain so.
All right. It is an opportunity, not just a challenge, but rather an interesting challenge, you could say that. Well, we've kind of exchanged notes on the broader startup ecosystem, the broader unicorns ecosystem. Let's get in some stories from the trenches. Aakrit, tell us about, your experience with investors, your growth story, your growth journey, and the sort of key lessons that you learned along the way.
I think my one lesson, purely from a fundamentals of business perspective, I've learned is, we keep saying and kept saying over the years that, this concept of TAM and, total addressable market in India. I have now come to believe that I think India is actually a supply constrained market. I think demand exists for everything. I think it is about, if you can build the right product at the right price and deliver it in the right manner, I think there's demand for every single aspect in this country. So, that is one business lesson that I've come to learn. And again, back to the earlier point, I moved back from the US and looked at numbers and, reports, this doesn't make sense. India is not that big a market, but it really is. And I think most of us confuse the supply-demand conundrum. Actually, my co-panelist businesses are great examples, right? I mean, credit always was a demand. I mean, everybody wants credit. Ofbusiness just did it in a much better way at a much better price and in a much better tech-enabled manner. Same goes with Rebel, right? I mean, everybody always wanted to eat, but there was not enough variety and not enough good food at the right price available. And then to your answer question, stories from the trenches about investors. I mean, look, I was telling somebody this last night. I love pitching to investors because I think you learn a lot, right? Because investors are the only ones who have like this horizontal view. I think just like when you sell to a customer or work with a partner, and you understand your customer's business to sell to them better, you understand your partner to partner with them better, you should also understand a VC's business, right? Fund size, lifetime, where are they in the fund? This partner, is he going to be around? What are his objectives? What is his current portfolio looking like? If it's on a hot streak, then probably, it's all of those things, right? And I think we don't, as founders sometimes do understand or comprehend that. And I think if you understand those things better, you'll see that it's all ultimately a business.
All right. Kallol, any lessons in excellence that you would like to share from your journey?
See, the fundamental equation is that if you're right and everybody thinks you're right, that's obvious thing. You'll not make any returns. So the ideal situation is you're right and everybody thinks you're wrong. That's where you want to be. So, just to add to what you were saying, I think it's important to get on people who basically agree with your view. I mean, I'm just giving. So fundamentally for me, entrepreneurship is a protest against status quo in some sense. And you have to determine the size of the protest at the very beginning. That is it going to be, should I form a political party or do I become vegan? I mean, these are both against status quo. So for us, we always were very clear that we want to build a big business. And I think everybody signed up for that. Along the way, we just had to adjust because we realized it's one brand won't do it because, whatever. We kind of reimagined if it is delivery, then why do we constrain ourselves? One brand for us is one occasion. If you think of any restaurant, it's one occasion. But if you are not visible to the customer, you can be relevant for multiple occasions. Whether you're celebrating, whether you're alone in office, these are different food occasions. So that's where you kind of adjust along the way. But fundamentally, we never thought that we will start delivering food from other restaurants. That never happened. So, what we started out to do, we've always stayed true to that. And I think at some point, that's what pays off. Because if you try to then, just go away from, your core, then that never works.
Absolutely. As they say, the journey is a richer experience than the destination. And we'll see where we are. Maybe in 10 years, we could all have different profiles. You would have expanded it into business, and you could be completely different than what you are doing currently. But in these changing times, it's also important to address this question of managing wealth, Nitin, especially, when we look at the time taken for a company to become a startup. I think in the early 2000s, it took at least 15 years for you to become a unicorn. And post 2015 $1 billion valuations, they have come in sort of a 2 to 5 year period. And with this comes that with the surge of money which comes in, it's also important for founders to look at managing wealth. 10 years, you fast forward in your mind and you think about managing your wealth. What would be...
In my mind, I would create about 20 to 30% of my portfolio in just investing in startups, and startups that actually will create a difference, will create some kind of disruption, right? And will actually have a huge total addressable market. I think that's fundamentally what I'm going to be definitely looking at. I'm not going to be looking at simple real estate investments, right? Simple real estate investments are passe, where you expect growth to happen. You park your funds there, you maybe put it on rent and so on and so forth. That's, I think, passe. Right now, people are looking at that high growth environment because people want to take advantage of that high growth environment. The next decade or this current decade is going to be that high growth environment. You talked about 250 unicorns by 2025. I think that number is underballed, honestly, for India. I think it's going to be significantly higher because I think if you just look at internet business, if you look at just credit cards, or if you look at just people investing in stocks, that's 3% of India's population. I mean, that's nothing compared to the US. US is in high double digits. So there's a huge gap to be crossed. I think so. Investing in startups at the moment, investing in those high growth businesses which have a total addressable market, a huge total addressable market, I think would be really smart.
All right, let me get in our other co-founders to talk about this. Your approach to managing wealth, especially when it comes as a surge.
So, and Nitin kind of was spot on. So about 25% of my wealth is invested in startups. So typically what you would refer to as angel investments and so on. I think pretty much exactly what he said. I think the purpose over there is, I often say that, it's the stupidest way to make money out of money, because you're likely not going to make much, because a lot of them are going to obviously fail. But it really is just amazing to learn and see and back other companies, where you were also once at that stage, right?
You're paying it forward.
Yeah, and also the learning opportunity is immense. I would never learn about crypto if I had not invested in a crypto company or any other similar sector, right? I would be very constrained to just what I do in AI. So 25% of the wealth is there. About 40-45% is in traditional assets such as mutual funds, debts, and so on. So that's about 70. And then the remaining 20-30 is between direct equity and now, of course, crypto as an asset class.
Kallol, what would you have to say?
Nothing, much to add, but...
your approach to managing wealth.
From our company, there have been 2 startups which have branched out, people who left and started. We've both been investors in those businesses. And I think it's at this point, it's more about, staying active mentally, because it's a bit like, if you're, you kind of miss, it's been a decade for us. And now it's not what it was when we were starting. So I almost miss that energy and, the vibe and that goes on in a startup. So it's almost a privilege to be, to have a track onto that. I think that's pretty much how you guys described it. I think that's...
you like the thrill of the game, the benefits come
what new is
later.
happening, and all of those things. And
I would say this actually, I got asked this question a couple of times after we sold the business, is that I look at least for me, exactly because it's so much about playing the game, I look at money as a point scoring system. Right? Fundamentally, it just defines who's on point. If you're playing this game, then where do you stand, who wins, who that. Exactly to his point, and even after we sold, I don't think I bought anything after that. I still use the same car, I still live in the same house. Maybe I do one vacation extra a year or something like that. But because it really, I think doesn't change much because you're just thinking about continuing to playing it and do something bigger.
Oh, we've come a long way, right? From the heady 80s, where if you have it, you spend it. We are now in a far more mature curve. Jean Damien, anything to respond to our three co-founders who've given their insights into managing and approaching wealth?
No, very insightful. I think the as they just said, when you're an entrepreneur, you remain an entrepreneur. I think that's a fundamental starting point. What we do see actually usually as a starting point of discussion is usually not the financial side. Actually, it's more the wealth planning, the family, is the overall situation, which a number of founders, having been working night and days, have probably not had time actually to think about. And in this long-term game, you end up actually probably losing track of the very long-term game for the family. So that's usually where we get involved. And then I think, as my co-panelist said, it's really about, as a wealth manager, enabling them to fulfill their ambition. So they have time to do actually what they're good at, which is about finding the new startups, or they feel, safe as far as the destiny of the family. So really playing partnership, but know where we can add value and know where you will add value.
All right. As we head to the last leg of the conversation, let's have a rapid fire round of questions to kind of cover various themes. First is, Kallol, what makes some successful startup founders different than others? What's the X factor? What would you say? Because you in an industry where there might be 1,000 options, only 2 or 3 survive. What's the X factor?
At some stage, it's not a choice. You just have to do it. I mean, it just bothers you to the point that you kind of cannot do anything else. I think Jaideep was with McKinsey, and his favorite line was that I got tired of changing the world slide by slide. So if he reached to that level, I mean, then it's no longer a choice, really.
All right. Now, in terms of growth drivers, Jean Damien, as India goes up in the value chain, what do you think are going to be the key drivers for growth? You mentioned 1.5 million graduates, right? Engineering graduates. Is talent going to be the key battleground?
Yeah, I think continue having this continuous growth in the system, continuous commitment to infrastructure, to education, is really going to be the key factor. My co-panelists have mentioned that the fundamentals are exceptional, but you don't want to stand still. Like you said, no status quo, right? So you need to continue. And I think that's really the key. All great, but continue, invest.
All right. Now, extending that, considering if it's going to be a talent battleground, you have to make your company an attractive destination. So the importance of work culture and how to build it to attract top talent. What are your views on this, Nitin? We'll have yours and then Aakrit.
Yeah, I think the most important thing is to carry people along, make them part of the decision making. So instead of the decisions trickling down from the top about what to do, how to do, I think it should be reversed. It's about putting people in situations and asking them, what do you think we should do? I think the question has to be opposite. I think that's worked for us. Instead of telling them what to do, we ask them, what should we do? So we carry them along, they become part of the decision making, and suddenly you got a barrage of ideas, and those ideas just sum up to be massive, because you can pick and choose what you like, and then you can pick and choose one idea and then apply it to the other situation, and so on and so forth. So it becomes amazing. So
rather than becoming directors, you become enablers.
Yeah, I think that's a right way to put it. You just have to enable them to get their real talent to come out.
All right. Aakrit, what's the secret of your success, considering, so many founders have emerged out of your company? So what would you say is the secret of your success, especially when it comes to creating a workplace culture that attracts great talent in a battleground which is very hectic?
Transparency. I think transparency is a very well understood term, but very difficult to practice. I think you'll be surprised as to how many large companies or unicorns in India are not able to practice it or don't do it really, really well. We've stuck to it from day one. We have a monthly town hall where I open up our company's financials practically in terms of what we did, where we are at, what's the gap. There are pros and cons to this approach, by the way, right? So there are a lot of disadvantages that people will tell you. but that's what's, to your question, what's worked for us consistently. And I think that's what creates enablers. That's what creates people who can take their own decisions because they feel so comfortable in the environment.
And in addition to transparency, the word meaning also gets bandied about a lot for a lot of the employees. Why are we doing what we do? And I'm talking from a purpose perspective, profit with purpose. So Nitin, your thoughts on how that thought could kind of reshape the entire startup ecosystems as a lot of these guys try to scale up, try to be high growth drivers, unicorns, decacorns. But when employees want profit with purpose, how does that balance happen?
Yeah, so I think it's very easy to say that you've got purpose defined on day one. I think that's absolutely wrong. None of us, if someone says that they've got purpose defined on day one, they're probably lying. So it takes a lot of time. So people have to be comfortable with the fact that yes, defining a purpose takes time because you're at the beginning of a journey. So you don't come out with all guns blazing to defeat that purpose or to get to that purpose. It takes time. And you have to be very clear and transparent with your organization, as my co-panelist said. And you have to be clear and transparent that, yes, we don't have the purpose right now, but this is the direction that we are going towards. And we will have the purpose figured out in about 3 or 4 months' time, or about 6 months' time, or may even take us a year. But we will get there. So it's about carrying people along and asking them to also define the purpose for the entire group or the entire company in that particular. So they feel part of the journey. We just knew that we wanted to do something in B2B. We never knew what we wanted to do. I mean, so we went on the field. It took us about a year to come up with the fact that, yes, it has to be a credit plus a commerce engine. And that took a little bit of time. But then once we got that going, I think then the acceleration of the growth started. So that's what it's about.
That's when the magic happened. But taking that forward to an other extent, right? If you look at, say, the green tech ecosystem, that sustainability is becoming a big part of what folks want to be associated with. So, Jean Damien, what can India do to sort of create a robust and sustainable ecosystem for green startups? If we bring in, we discuss transparency, we discuss meaning, and we discuss purpose. So, as we combine it together, where it all comes together with a green startup, let's say, for example. What does India need to do as we look to wrap up this conversation? Your summary views.
Yeah, I think the ingredients are here, right? We've discussed the ingredients to start this kind of sustainability acceleration. You see actually globally a number of initiatives. Europe has a very regulatory-driven incentive environment, taxonomy, etc. A number of things are happening to encourage people. I think back to the theme of this discussion, you want to be authentic. You want to represent a genuine benefit and not a short-term opportunity to raise money faster at a higher valuation. I think that's the key, because while you may get indeed regulation coming your way to actually test the benefits you're claiming, it's one side, it's necessary, but it's kind of ex post, I would say. What you need more, I believe, is to make sure that from a transparency standpoint, a purpose standpoint, you're addressing a need where the benefits can be demonstrated clearly. Because let's face it, there's so much money being raised in the wake of that thematic, which is why regulators all over the planet are getting excited, because no one is really sure that the money is genuinely actually investing for that purpose. So I think having very clear sets of expectation, being very clear in terms of representing those benefits, fundamental. Now, as an investor, what will help me is to get some common standards, because if I have to dig into every single opportunity in the details, it's a bit cumbersome. So more to come.
Lots more to come. And on an enterprise level, I guess the motto would be the change that you want to see in this world. On that note, it's time to wrap up this special presentation titled Forbes India Presents India's Growth Drivers, powered by Barclays Private Clients. I'd like to thank all of our panelists for sharing their insights and lessons in excellence on this topic, this growth story of India's unicorns. And of course, thank you to our viewers for tuning in as well. Till next time, this is your host Gautam Srinivasan signing off. Have a great day.
Forbes India presents India's Growth Drivers, powered by Barclays Private Clients.